everyone, and welcome back to ET Auto. As we enter the last month of this calendar year, we are back with our monthly series, The Month Gone By, where we bring to you the major highlights, key insights, and the latest happenings from the last month, that's November 2024. For today, we have our guest, Mr. Pushan Sharma, who's a Director of Research at CRISIL Market Intelligence and Analytics, Mr. Arun Malhotra, the industry expert, and Mr. Kumar Rakesh, who's the India analyst at BNP Paribas. Thank you all for joining us today. To
Thank
begin
you.
with, let's first have a look at the passenger vehicle segment, which is largely driven by a robust demand for SUVs. Stacking up the dispatch numbers for November, we see all the top OEMs reporting a year-on-year growth except Hyundai. Mr. Kumar, I'd like to begin with you here. Very briefly, if you could share, what kind of a picture would you draw of the consumer demand for passenger vehicles during November?
Hi, Shubhangi, and thank you for having me on the show. Passenger vehicle demand has been moderate for this financial year. Part of the reason we had noted was that there was a pent-up demand in the base, which is no longer there. And also the entry segment is a segment which hasn't been doing that. Even in November, if you see the entry segment doesn't seems to have come back. But what we have definitely started seeing is that the growth has started uh, consolidating or stabilizing at mid-single digit sort of a growth for the overall industry. For the OEMs that have reported as of now, it seems like we are trending about 7-8% sort of a growth for the industry, which seems to be better than actually what the growth numbers were. In that context, it seems like hopefully the worst is behind. From here on, the base will start turning more favorable for the passenger vehicle industry. And also, we have multiple model launches lined up in this quarter as well as in the next quarter. Also help in reviving some of the demand, especially in the SUV space.
All right, Mr. Pushan, coming to you, if you could just bring out some macroeconomic factors because we've just seen the GDP report as well for Q2. Any major factors that are impacting the car sales here?
So we're seeing that there is some, slowing momentum overall. YTD, one looks at the figures, the sales are pretty flat. And read in context of the GDP numbers, we see that the GDP growth in Q2 was only about 5.4%. Inflation has been trending above that, percentage point. And that we believe is causing some slowdown. Together with that, if you look at the interest rates, they remain elevated. And the RBI is definitely considering the high inflation numbers, and that's the reason why they remain elevated. And these are some of the reasons that we see the momentum has not been so strong on the passenger vehicle side. Inventory has been a critical concern on the PV side, but luckily we saw good retail momentum in October. In October, the retail sales were 37% higher, wholesale being just 1% above previous year, and that led to some reduction in the inventory levels. So with that, the period ahead could be slightly better for PVs.
Yeah, that's fair enough. Before we move on, we must also note that the festive season drives almost 25 to 30% of the annual car sales. And as against last year, when major festivities were split between October and November, this year all of them were constrained only during October. So the month of November was especially critical for this segment to gauge the actual consumer demand. Mr. Malhotra, coming to you, what has been your biggest takeaway from the last month in terms of passenger vehicles? Also, please tell us, is it fair to assume that while the wholesales for the November have seen a year-on-year uptick, the retail sales would be comparatively lower because of the festivities falling in different months? And should the consumers continue to rely on year-end discounts during December?
So, passenger vehicles definitely were very good in the month of October. It would nearly touch 5 lakhs in terms of retail. And since dispatches was 4 lakhs, there was a 1 lakh correction. But in November, if you see, the companies have still dispatched 3.5, retail is around 3.3. Unfortunately, the stock reduction in 2 months is hardly 1 lakh numbers, which is not enough. And today, even I think passenger vehicles are on 6 to 7 week stock. They're not in 10, 11 week stock, but 6 to 7 week stock is a high stock. So that's a part of the thing. The other issue has been on the discounts. Actually, in December, discounts used to be much higher. But actually, this time, the companies were very aggressive in October. And even in November, although they didn't announce much in the media, heavy discounts were still on. So I don't know how much discounts can be raised in December. So that's a question. But December sales generally are good. But generally, December discounts are also 5 to 10% higher. So that way, I would say passenger vehicles are at a critical point. So things and cumulatively, if you look at Vahan data, the growth is 1.7% in the first 10 months. So even if we do well in December, January, February, March, the growth will not be more than 2 to 3%. So it's a mixed bag as far as passenger vehicles concerned.
Right. Mr. Rakesh, do you see any triggers for the growth of entry-level cars going forward?
So one of the reasons we believe entry segment car has been struggling in India has been a reflection of the unorganized sector pain. And that is one of the sector which got impacted the most for the COVID lockdowns. And as that segment starts seeing a recovery and saving in that space, we would start expecting some of those demand coming back. There's also a shift towards the SUV per se. So while we do classify everything in SUV, there is now a micro SUV segment also which has started coming up. And that has also started eating into some of the demand of entry segment, which we are talking about. So there would definitely be some churn away from demand from the entry segment to these micro SUV segment, and some recovery plainly driven by the unorganized sector starting to show some recovery.
Hmm. Do you see this recovery happening next quarter, next year?
We are yet to see the stabilization to play out. So we would first wait for the entry segment to start showing stabilization. That segment is still declining. So going by how it is performing as yet, it's looked like it would be too aggressive to expect that recovery to start playing within a quarter or two. But hopefully by sometime in FY26, it should start playing out.
Got it, got it. Coming to the two-wheelers, month over month, this segment has been seeing a gradual recovery in wholesales and retail sales for this year. When looking at the November stack for wholesales, we see Hero, Bajaj, and RE have reported a year-on-year drop, while TVS and Suzuki have reported a year-on-year growth. Honda is yet to share the numbers. Mr. Malhotra, I would like you to pitch in here. How should we perceive these numbers for November? Should we at all see this as a first sign of the demand going down the hill for retail at all? Or is it just a temporary blip in the wholesales? The retails are going to be good.
So one thing which is very surprising, and there are reasons for it, is that the Vahan figures for November for two-wheelers are all-time high. They're running at 24.5 lakhs, which has never been the case.
Right.
If you speak to industry experts, they're saying that the end of October sales, which happened on Dhanteras and Diwali, which was because the registration in two-wheelers takes slightly more time, they got registered in November. But even if I take October, November together, Vahan was showing the retails is about 45 lakhs, which is good by any standards. And dispatches against that are around 36-7 lakhs. So two-wheeler has one advantage. One, the retail is much better than what the wholesale figures show. Second thing, the stocks at the dealerships are very much under control. And with, as mentioned, the rural money is slightly better, probably in terms of crops or reservoir water levels being better, and tractors are even probably seeing positively. So, and they had a low base, so they could get into nearly a double-digit growth this year. So the wholesale figures are slightly deceptive in November as compared to retails, because as far as passenger vehicles is concerned, the retail is lower than the wholesale. Against 3.5, the retail is Vahan is showing only 3.3. So that's a difference. So you have to take both the things together, and to me, Vahan is a better indication of the reality of the market.
Yeah, the industry is showcasing a mixed bag, and passenger vehicles and two-wheelers are moving differently. Mr. Kumar, would you like to add to this, sharing a perspective from the rural and urban side, and something on how the vehicle financing might be impacting the two-wheeler sales as well?
Yeah, Shubhangi. So I agree what Arun was earlier talking about, that the demand driver seems to be turning more favorable, especially for the rural consumption. But there's another angle which is making us quite concerned about the two-wheeler demand outlook, which is the financing penetration. For the last year or two, if you see the financing penetration across the two-wheeler OEMs have significantly increased, both driven by their own captive financing arm as well as buoyant financing environment by NBFCs as well. Now, over the last 1 year, especially through this year, you would have noticed that RBI has started turning quite cautious and concerned about the strong growth that NBFCs and MFIs have been seeing. and they have started putting in restrictions and regulations to contain any deterioration in the credit quality. But the thing is that in September quarter, if you look at the financials of some of the captive entities of the financing arm of the two-wheeler OEMs, the credit cost has already started deteriorating quite sharply, and their AUM growth in line with that has started coming down. We fear as we get into the second half and possibly into FY26 as well, given that the credit quality has already started deteriorating, delinquencies have started going up. We would see NBFCs and even the captive financing arms to start to pull back some of the buoyant financing that they have been doing over the last year or two. So while the underlying demand driver seems to be is turning more favorable, the buoyancy in the financing market possibly may not be as high as it was. In some of the checks, we noticed that even 100% of the vehicles gets financed and customers don't have to make any material down payment. Those kind of very lucrative financing terms which were available in the market may start away, and that could impact the demand as we move from here.
Okay, so financing could be a factor playing in. And now, Mr. Sharma, I would like to bring you in to put a spotlight on the commercial vehicle segment. And the monsoon was also good this year. So I would also ask you to please outline the demand in the tractor segment as well.
Right. Just before that, if I could talk about the two-wheeler part, we are seeing this divergence between passenger vehicles and two-wheelers. But what I believe is it's only optical in nature, the growth that we're seeing in two-wheelers. And the reason why I say that is if you look at the FY24 volumes of two-wheelers and compare that to FY19, two-wheelers were close to about 90% of FY19 volumes. Whereas passenger vehicles were about 1.25 times of FY19 volume. So two-wheelers were slower to recover, and that's because a large segment of two-wheeler users are from the service economy who got severely impacted during the pandemic. And there's also an impact of the K-shaped recovery. So the wealth percolation down the pyramid has been slower, and which is why we're seeing a recovery in two-wheelers right now. So the growth that we're seeing is I would say still optical in nature and not so much of it should not be read as a divergence. Now, coming to the commercial vehicle part, here we're seeing some slowdown in the volume numbers, and one would have to look at the medium and heavy commercial vehicles separately and the light commercial vehicles separately. While there is slowdown in the medium and heavy commercial vehicles, one should not look at only the volumes and one should look at the tonnage growth. And over the last two fiscals, that is fiscals 23 and 24, the tonnage growth cumulatively has been about 20% higher than the volume growth. So there has been excess supply in tonnage terms that has been created, which is why lower volumes are still playing out. But we see that continuing in the near future. And the reason why I say that is again because of slow growth of the GDP, and the commercial vehicle is a true barometer of economic activity. Government expenditure also has been slightly subdued. Infrastructure expenditure, etc., has been subdued. Manufacturing GDP, in fact, for Q2 has been lower than agriculture GDP. So if these numbers, are playing out, that definitely has a bearing on medium and heavy commercial vehicle demand. But going forward, with an expectation of pickup in the government spending, the medium and heavy commercial vehicles are expected to do slightly better. Coming to the light commercial vehicles, here again, the private final consumption expenditure plays a very critical role. We're seeing that again not playing out significantly, as a result of which the volumes up for replacement, which were 10% higher than last year for the light commercial vehicles, those are not coming into the market. And that's the reason why even light commercial vehicles are not doing as well. Buses, on the other hand, are performing much better than the other two segments. So that's on the commercial vehicle side. Coming to the tractors, here we're seeing that the growth has been so far it's been a little subdued. There is expectation of a pickup in growth, higher food inflation, which means higher prices for crops. That while it impacts the consumption for the retail consumers, for the farmers who are growing the crop, it could mean slightly better incomes. The reservoir levels this year as compared to last year are in a much better situation. So the winter crop, that is the Rabi season, is expected to do well. And profitability for the farmers is expected to do better. But that is going to come in the hands of the farmer only in March and April. But overall, Kharif incomes are flowing in as we speak, and that should prop up tractor demand to an extent. But we don't believe it's going to be a very strong growth for the tractor industry. We're expecting somewhere close to about 2 to 4%
That's
for
right.
this.
A lower single digit.
Yeah.
That's right.
Okay, okay. And Mr. Kumar, would you have anything add to this for the tractor demand? Any kind of challenge do you see in addition to this?
One tailwind is there that in second half, the base starts turning quite favorable for the tractor demand. If you recall last year, especially towards the second half, we had started seeing the slowdown to play out for tractor demand. So that can potentially start turning more favorable for the tractor industry. That being said, the demand drivers which Bhushan was talking about definitely is there, although it will take some time for it to fully play out and start translating into recovery in tractor demand. If you look at the longer term trend for the tractor industry, which is if you look at the last 35, 40 years of data of the tractor industry and the cyclicality which typically plays out in the industry, you would notice that it usually goes through about 3, 4 years of growth cycle and then 1, 2 years of decline. Last year was flattish to some decline. If that were to be the trough year for the tractor, we would expect FY25 onwards, the recovery years to play out. That being said, we wouldn't expect the kind of volatility or the peaks and troughs that the industry used to create earlier, 20-30% sort of a peak volume growth and similar trough levels as well in terms of decline percentage. We think it will start moderating more towards high single digit in terms of peak that the cycle would see. And that's partly driven by the use cases which have become far more diversified. Tractors no longer are being used only for agricultural activity. It's now even getting used into construction activity, haulage purpose. So the use cases have diversified and hence the volatility in demand also has reduced than what it used to be 10 years back.
And now getting a quick hang of the EV sector, from the last month, we see there are two major developments. One, the Delhi government has announced an extension of the EV policy till March 31. And in the two-wheeler segment, which has been taking a lead, but still accounts for just about 6% of the overall two-wheeler sales in the country. One of the top OEMs that was not there, Honda, has announced its entry into the market. So the good part, I believe, is that during the course of the year, we have seen the top five players gradually consolidating their position in the industry. But what is yet to be seen is how their share and position in the market evolves. Mr. Malhotra, I want you to take this up. How do you see the market evolving, especially with another major two-wheeler maker now entering the market? How do you expect the shake-up to take place?
So, one, clearly that the top five players, basically, if you look at this one figure, very interesting. I think it's the first time it happened. The top 1, 2, and third position, Ola, TVS, Bajaj are neck to neck. So, which is good. If you have competitors who are strong in itself, and there are two other players, Ather is also there, Honda is also there. To that extent, these five players itself contribute 85%. So, Honda's coming in is good, but I think it has got a good presence as far as all the two-wheelers concerned. I think the challenge still remains is that the focus is still on the scooter market, and scooters contributes 1/3 of the market. So, although scooter sales are now hovering in EVs, consistently now going, even this month has been 1,25,000, which is a good number by any standards. It was 140 last month. It has not gone down. But that's the where I think the companies will focus on getting motorcycles in the near future, and that will take it up. But I think the positive point is an average normal customer, that fear of EV, range, reach, price, that is going by the side. And these sales are happening in spite of not much of incentive in the field. As far as four-wheelers is concerned, it is still cause of concern. The retails have been very disappointing, but I would still think there's a silver lining in this. One, the fleet sales have come down because government has discontinued the fleets and taxis. But the other big thing is a lot of action is being planned in the next 2 months. Mahindra has had some major preview launches. Maruti is coming in January. Windsor has got a good response, MG. So to that extent, customers are also waiting and watching. So I believe probably from January, February, there will be an inflection point on passenger vehicles is also concerned, when you have 3-4 strong players competing for it. But having said that, it's still a long way to go. But two-wheelers, much better footing. And if some motorcycle models, which companies have plans come to the market, it will really give a fillip to double digit or more than 12-15%.
Okay, okay. I was just coming to that, the electric passenger vehicle segment. Mr. Pushan, I'll come to you here. With so many launches ahead, do you also agree with Mr. Malhotra, the inflection point might occur in the next quarter? And secondly, I want to know your insights on the battery as a service business model. Because earlier, as we have seen, JSW MG has introduced it, and now Honda is also coming up with a subscription fee battery as a service kind of a model for electric Activa.
Right. So if we talk about the passenger vehicle segment specifically from for EVs, the Indian consumer is very value conscious, and about 90% of the sales are on the personal car side, about 10% or lesser than that on the
That
fleet
is.
side. And for the personal car, the average distance that is run annually is only about 10,000 kilometers. So for the viability of choosing an electric vehicle over an ICE, one has to really run the vehicle for a good 6, 7 years for that viability to take place. So as far as our analysis goes, we see that the vehicle prices still need to come down on the EV side. And we see that inflection actually only happening in a very meaningful way over the next 1 or 2 years. So it's going to take some time.
I,
Uh, uh,
I just have a slight different view on this, sir. I agree with your part of it that there is a range and this anxiety. But one of the challenges in electric four-wheelers was there was no aspiration built into vehicles in terms of styling, in terms of features. The moment you start building that up, a lot of people will overcome this. They take it for aspirations, imagery. That segment will start emerging. To me, that is going to be a critical point. But in the long term, what I agree with you that the inflection point in real numbers will be a little later.
yes.
But if you start comparing only on the basis of value, range, reach, this thing, and you still want to put all the technology in the back end, it doesn't happen. So the MG success of MG Windsor and the phenomenal response, the pre-launch of Mahindra and even Maruti's models, which have been previewed in Italy. So I believe it will start because there was nobody in the party. Only one company was there really in the party of passenger four-wheelers, unlike two-wheelers, there were 5, 6 serious players. So that's the difference I see only. But I agree with you. Still, Delhi, it's 2 years down the line.
That's right. That's right. So I was actually talking more in terms of, when do we see penetration going above 5%, 6%
That's true.
levels, right? That's when we will see like the mass market vehicles coming into the market. That's when it'll happen. Yes, definitely more options being available to the customer, more aspirational purchase. A segment of the buyers may be, inclined towards that. Also on the two-wheeler side, you touched upon Honda's entry, and we believe that given that Honda has been a leading player on the scooter side, and scooters is where we're seeing a lot of EV adoption, their entry is a good signal into the market and gives customers a real good viable option, right? So that will lead to more traction on the two-wheeler side, where the economics are already tilted in favor of electric vehicles, unlike PVs. So that's going to be beneficial. Coming to battery as a service, this will be appealing more where there is a common use case, especially in the fleet application. So in case of fleet where they can really utilize that entire infrastructure can be built, we believe battery as a service is going to play out exceedingly well in that space. Overall, there has to be a lot of commonality that'll need to be built across OEMs for this to really succeed at a larger scale on the BAS part.
Right, the infrastructure needs to be worked out. And Mr. Kumar, you largely take stock of the global market. So could you also help us understand the vehicle export market and how has it been lately? Are there any, if you could just point out some headwinds and tailwinds for better understanding?
First, on the passenger vehicle side, I think we have seen the passenger vehicle growth, especially what Maruti has delivered over the last 5 years, have been quite phenomenal, growing at about 19% CAGR between FY19 to FY24. And what we are noticing is that Maruti's success is very similar to what Bajaj's success in the export market has been. It's very similar markets, African markets, Middle East, Latin American markets. Demography and price points are very suitable to those countries. And the product also is quite attractive from that demography perspective. And that is something which we are seeing that in some of these markets, Indian products are really working out well. For the two-wheelers as well, we have started seeing sequential recovery over the last few months. Even in the month of November, we did see strong recovery in the export market for the two-wheelers. And we would expect that to continue. Crude prices have been relatively higher. That works out well for many African and Middle East markets. And hence the demand and availability of dollar to import these vehicles should be there. And hence we would expect this recovery to continue on the export market.
Okay.
Before handing back to you, just I'll add one more point on the EV discussion, which Pushan and Arun were having. I
Yeah.
think over the next year or two, we would also interestingly see how hybrid plays out. Because so far we hardly have any product in the country on the hybrid side, just a couple of products. But as 26 comes in, our checks are indicating that Maruti will start launching its series technology products as well. And globally, we have seen hybrid actually kicks off pretty well and potentially gives gets higher penetration than EVs as well. We have seen that in Europe. We have seen that in China as well. So once the product at very attractive price point from hybrid starts coming in, we could potentially see, not necessarily at the cost of EVs, but definitely as share of the overall demand, a hybrid could also start seeing a very.
Yeah, all in all, the next 2-3 years are going to be very interesting for the auto market as the technology evolves. So, coming to the last segment of the show, I would like to pitch this question to each one of you. One line on the outlook of the auto industry, the expectations that you have from December, and your full year estimates. I'll start with you, Mr. Pushan.
So if we look at the passenger vehicle industry, we're going to see continued pressure on the entry-level cars. The UVs are expected to do better, and one can see that in the YTD figures as of October, sub 10 lakh cars are at about minus 9%. Right, so there is continued pressure that we see on the entry-level cars, and the cars priced more than 10 lakhs are growing by 6%. So that is going to continue to pan out. Two-wheelers, we're expecting them to march towards the pre-COVID levels and grow about 11 to 13% for the fiscal. I missed stating that for the cars, we're expecting cars to be flat to slightly negative for the passenger vehicle industry. Commercial vehicles also, we're expecting them to be flat to negative this year.
Got it. Mr. Malhotra?
So I agree with them that as far as two-wheelers is concerned, you can expect a double-digit growth, but with that caveat that all-time records were created in 2019. So the double-digit has to be said. So 10 to 11% in two-wheelers. Passenger vehicles around 2%. I still believe they will be above zero because they're already at 1.7 plus. And commercial vehicles, it should be generally the same. And I think the tonnage story is a slightly different story because they're vehicles, heavy commercial vehicles with more fleet and more movement is happening. But I think an electric vehicle, two-wheelers, is where I think the growth this year, although on a small base, should be around 40 to 45%.
Okay. And Mr. Kumar, what's your estimate?
For two-wheeler, we are relatively more cautious, so we would be expecting high single-digit growth. And for passenger vehicle, we expect about 2 to 3% growth for the current financial year. Although the divergence in the growth should start narrowing in the second half. For the last 1 year, there had been a huge divergence between the growth being much higher than passenger vehicle. We would expect some convergence to start play out with numbers.
Okay, so two-wheelers, we've got a slightly different view, and passenger vehicles is very low single digit. That's it. All right, then I'm sure this is going to be very helpful for our audience. Thank you so much for sparing your time and joining in today. Have a good day ahead, everyone, and best wishes for this week that has just started. Thank you so much.